Warren Buffett, Jamie Dimon, Mark Cuban, Carl Icahn, Howard Marks, and Charlie Munger, like it or not, have all termed crypto as a currency that is bound to end badly. Imagine taking your hard-earned money or a dollar bill that depicts your entire wealth, ripping it in two, and now you're left with half of what you started with. Or even worse, you took too long to cash out and now you're left with a mere quarter. That's yours. Better luck next time. Well, if that seems dramatic or exaggerated to you, then you should see cryptocurrencies' performance over the last 30 days and analyze their performance. Now, if it were stocks, we would have told you that you don't need to panic and fluctuations and bear markets are part of the game. But when it comes to crypto, there's a very real potential of potentially losing everything. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. Cryptocurrencies have seen astonishing growth since their debut back in 2009. Starting initially at $0.0008 per token, after many years of growth, now it's standing at a staggering $22,000. People have embraced crypto with open arms, but the trend is the other way around in the billionaire lane. Investors and billionaire tycoons like Warren Buffett, Charlie Munger, Jamie Dimon, Mark Cuban, Carl Icahn, and Howard Marks have all termed crypto as a non-productive asset and an asset that is bound to a bad end. Well, for some people, this might come as a jab in the face, but for others, it might save them money in the long term. In this video, we're going to tell you why billionaires are standing against Bitcoin and why Bitcoin is going to zero. As Buffett puts it, they will come to a bad end. The legendary investor and the owner of Berkshire Hathaway, Warren Buffett, says that cryptocurrencies and Bitcoin in particular are bound to end badly, and his company Berkshire Hathaway will never have a position in these currencies. This is what happens with non-productive assets, because the asset itself is providing you with nothing, and you're just dependent on people who are excited to buy Bitcoin just so that they can find other people who are even more excited to buy Bitcoin and make profits. The Oracle of Omaha exemplifies that you won't get any golden coins coming out of your computer when you buy Bitcoin. In one of his interviews about Bitcoin, Buffett puts it that whether it goes up or down in the next year, or 5 or 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't produce anything. Furthermore, he adds that it's got a magic to it and people have attached magic to lots of things. Berkshire Hathaway's vice chairman, Charlie Munger, told the Australian Financial Review that people should follow his lead and avoid digital currencies. Crypto is an investment in nothing. Charlie Munger, who is a close aide of Warren Buffett, even went a step ahead and termed crypto as rat poison, something that kills you slowly but eventually, and says that non-productive assets are all the same, and none of them promotes exponential growth. Charlie says Bitcoin is stupid, and it is very likely to go to zero. Munger praised China for banning cryptocurrencies and wished that they never existed or were never invented. This stance, adopted by the 97-year-old vice chairman of Berkshire Hathaway, is not new, but he has always disliked Bitcoin and stresses that he won't welcome a currency that's useful to kidnappers and extortionists and so forth. Nor does he want to shuffle millions or even billions of dollars into the hands of someone who invented this financial product out of thin air. Buffett exemplifies that suppose you're an owner of a farm that produces beans and rice as crops, and that the farm as your principal investment is safe. The farm is providing you with some additional profit in the form of yearly crops, and that is what differentiates productive assets from non-productive assets. In productive assets, our principal investment remains spade, and we're not at risk of losing our principal sum. The same is not true for crypto. Similarly, Robert Kiyosaki, who is also the writer of the best-selling book Rich Dad Poor Dad, suggests that he will never invest in Bitcoin. There are a few obvious things for many billionaires to step back from investing in crypto. He dismisses Bitcoin as nothing but valueless. Now, crypto is electronically traceable, which also means that all of your transactions are easy to access for all governmental and non-governmental organizations. There is no sense of privacy when it comes to investing in crypto. Secondly, the cryptocurrencies are limited in supply. They are scarce, and all it takes is for one legislator to simply write that crypto is illegal, just like it happened in China, and all of your hard-earned dollars are gone. Now, another factor over here is that the government is not responsible if something off happens with your crypto account, further adding to the insecurity. The state is not responsible for your crypto wealth like the US dollars deposited into an FDI. Now, if some misfortune happens with your account or crypto wealth, For example, the company that is providing you the wallet services where you store your crypto funds can go out of business, or it can also undergo some sort of system failure, and it can lead into an absolute disaster for you. And guess what? The government will not care one bit about your money because it has no obligation to help you recover your crypto wealth. Bitcoin, Ethereum, and Dogecoin are all the rage. Most billionaires don't hold crypto, and this position is not likely to change anytime soon. The extreme volatility has made it a not to buy option for many billionaires, but deep down, there are many flaws that we're usually ignoring. We all know that a lot of assets can be volatile, and shares in the short term can be volatile, but with stocks, there is often a degree of long-term stability. There is a degree of price predictability that most investors make use of. But with crypto, no doubt that some of the leading bankers and even JP Morgan are having a change of heart. But when it comes to volatility, the investing lane is usually sidelining crypto over this. It's completely unpredictable when it comes to timing. Another reason why you shouldn't be getting your hands on crypto is that it is exposed to an extremely volatile environment, which also means that these currencies undergo price changes in days, minutes, or sometimes even seconds, and the changes are significant. The world of finance is divided between crypto and stocks, or to be more particular, productive assets and non-productive assets. But one dead sure thing is that if you press that subscribe button and comment subscribe in the comment section, we're going to reply to every single one of the comments. Now, crypto is dependent on the basic supply and demand principle, which also means that your investment, which was worth millions of dollars just a few hours ago, is now worth just a few dollars just because some influential billionaire has termed it worthless, and the people don't feel that crypto is worth it. Many people may feel that crypto payments are going to replace everything, and that is far from reality because crypto payments are far from secure and they do not come with legal security and protections. Our usual bank accounts, for example, have legal security, and that means the government is bound to help us out if something off happens. For example, now if you're having second thoughts about a purchase you just made a day ago, your credit card company has a systematic process to help you get your money back. Cryptocurrencies typically don't have this advantage and do not come with any such protections. Moreover, cryptocurrency payments are not reversible. Now, the million-dollar question is why Bitcoin is going down and why crypto is going to end badly. The simplest answer to this question is that Bitcoin price is dependent on mere speculation, and it's human nature that we're all striving to get our heads in place where speculation is the thickest. It lives till the day when people find some sort of excitement in it, and the day it disappears, so will the price and your hard-earned money. A much better investment, if you're looking to gain your financial independence, is to invest in stocks. And for that, you need to have a strong foundation which will come from your ability to analyze stocks. This is the reason we've provided a free ebook in the link given below, which will explain the 6 stock categories. Check out the video we handpicked for you, and we'll see you in the next one.